Hello, and welcome to What's the Deal on JP Morgan's Making Sense podcast. I'm your host, Roshan Ahmad. I head our global sovereign advisory business here at JP Morgan. And today I'm joined by our returning guest, Arsalan Mahtafar, who is head of our development finance institution. Welcome, Arsalan. Thank you for joining us today.
Thank you, Roshan, for having me.
Before we go into the meat of the conversation, can you tell us, since you have taken on this role in 2023, a little bit about the Development Finance Institution's journey since, and also your background?
Sure. So I spent my career first in management consulting, where I was working with developing country governments on helping them implement country growth strategies, how they put policies and investments in place to grow their GDP and do so sustainably and inclusively. And I joined JP Morgan about 8 years ago, first in our internal strategy team, and worked on the strategy for launching this new JP Morgan Development Finance Institution. And as of 2023, as you mentioned, I took over as head of the team. And so this is our 5th annual report. We launched the DFI in 2020, and it was always thought about as a commercial solution to financing sustainable development. We have a lot of public development banks out there, but we think the private sector could also play a very constructive role in mobilizing capital for sustainable development, especially that this coincided with the rise of sustainable investing in Wall Street as well. And JP Morgan, as a sell-side institution, can play a critical role in being an intermediary between companies and governments that need capital for sustainable development and investors that are seeking opportunities for investing their capital towards sustainable development.
Sounds very good. So before we go into the details of the 2024 report, how about we take a step back and ask you to walk us through the latest trends in the sustainable finance industry?
I'm seeing about 3 things evolving in the industry over the past couple of years. One is that investors are moving more from ESG and moving more towards looking at impact, meaning that they're looking for social and economic outcomes that their investments produce versus thinking about how being exposed to certain environmental social risks might actually reduce their financial performance. The second thing I'm seeing is that they're looking at that more at the overall entity level of a company that they're investing in. One thing that I hear from investors is that I don't want to just invest in a sustainable bond. I want to invest in a sustainable company that is doing positive things for social and environmental outcomes. So that's another big shift, and that really expands the range of possibilities that investors have for investing. And the third thing, and this might sound counterintuitive to a lot of people, is that we're actually seeing growth in this space. Despite a lot of the headwinds that we also see, year over year, assets under management managed by sustainable investors grew by about 8% over the past year, though that growth is different by geography, and we do see the bulk of that growth come from European investors and now some Asian investors as well.
So now to bring it closer to home, what are we, the Development Finance Institution, doing in this space?
Well, we had a really good year in 2024. In fact, we had a record number of client engagements. We engaged with 22 clients as their development finance structuring agent, where we helped them measure and disclose their development impact, often in conjunction with raising capital in the capital markets. And we supported crowding in impact investors in about $5.6 billion of capital that we raised for our clients. We also were the co-chair of the Impact Disclosure Task Force, an effort to expand beyond doing this just at JP Morgan and helping build an ecosystem that can mobilize capital at scale for the sustainable development goals by creating a standard for how impact is measured and disclosed. We hear this all the time. All of the investors say we need to simplify, we need to harmonize the way that impact is measured and disclosed. And we spent 2 years on actually doing that. And when we published the guidance in October 2024, we now have an industry consensus on how to do that. And we think that's going to take a giant step in mobilizing capital at scale for the SDGs. And then lastly, one of our roles is also measuring the impact of JP Morgan itself on all of the corporate investment banking transactions, regardless of whether we were involved at the time of execution to crowd in impact investors. And there we also broke a record, and we evaluated $139 billion of CIB transactions to have development impact.
So, Arslan, another interesting thing that I read in this year's report was that the DFI is now expanding into clients based into higher income jurisdictions. Can you tell us a little bit more about that? Because that doesn't really go hand in hand with development finance.
Yeah, so if you look at the public development banks, there are clients that are mainly based in lower income jurisdictions because it makes sense. Development finance is often defined as helping improve the quality of life of people in developing countries. And so financing entities based in developing countries was our initial scope of clients as well. However, we saw that there are a lot of clients that are multinational, and while they're based in developed countries, they have extensive operations and therefore extensive impact in developing countries as well. Last year, for the first time, we started helping those clients to measure the impact of their operations in the global south and help them attract impact focused capital for expanding those pieces of their business to have more development impact. So one example is the Korean Export-Import Bank, KEXIM, which generally finances Korean companies to export goods and services to developing countries. But they wanted to come up with a new development finance strategy where they would finance projects in developing countries regardless of whether it had a Korean nexus or not, as long as it had demonstrable development impact. And so we served as their development finance structuring agent to help them design the development impact framework they would use to measure investments that would be eligible for that strategy. And we also then served as their underwriter to raise $500 million of capital to support that expansion of their development finance strategy. And what was really interesting for me here was that KEXIM doesn't necessarily struggle with raising investor capital. For this specific bond, they wanted to attract investors that valued their development finance objectives and had alignment of criteria themselves with these development objectives. And so our team really helped identify those investors and crowd them into this order book so that that alignment of interest is realized.
Very interesting. So now we're looking forward at 2025. What are you most excited about for this year?
So there's a couple of things that I'm really excited about. One is just growing our geographical footprint. We've done a fair bit of work in Latin America and in Central and Eastern Europe, Middle East, and Africa. I think we've been less penetrated in Asia, and that was partly due to the fact of how our team has just been laid out across the world. We have more people in the US and in Europe that can serve these markets. But we're now expanding my team to have resources on the ground in Asia Pacific so that we can look at clients in Asia that want to attract impact-focused investors, especially as we're seeing a rise in impact capital coming out of Asia as well, especially with the Japanese investors that have already grown their assets under management from 0 to 70 billion over the past couple of years and aim to increase that to about 600 billion by 2030. So we are really looking at doubling down on Asia over the next year, and I think devoting more resources to that part of the world is going to really help us do so. The second thing that I'm really excited about is to facilitate the implementation of the guidance that I just mentioned. So we want to simplify, harmonize impact data. We took a big step in that direction by putting out this guidance, but still applying the guidance takes time, takes resources. And we're in a unique time in the world where we have technology. We have generative AI, we have LLM models. And so this guidance coming out at the same time that these new technologies are also being applied at scale provides us the opportunity to create technology that will apply this on an automated basis, produce these impact disclosures automatically for companies, and integrate that data into financial decision-making in a much more streamlined way so it removes the burden from developing country entities that need that impact capital and increases the benefit much more for them.
So to wrap it up, Arslan, I did want to follow up on a point that you mentioned on using AI and LLM and all the technology that's available to us today. So how are you and the DFI thinking about employing that for 2025?
So we're currently working with several members of the Impact Disclosure Task Force to create a multi-dealer impact data platform. This platform, what we want it to be is the go-to hub for all impact data, provision, and engagement with companies to show more transparency on how they're making progress against those intentions and ultimately increasing the accountability for delivering on these development impact objectives. It will become a go-to source for the impact investors so that they can go and search and filter through this platform to find companies that meet their impact objectives. So if you have an investor that is looking for a company that has impact on food security in Latin America, they will filter for SDG 2 and they will see every single company that claims to have such impact, what their plans are for having such an impact, what is their theory of change for whether their actions will actually achieve those food security outcomes, and what are the KPIs that they're going to be using to track whether they succeed on those objectives or not. So all of that information is going to be somewhere that is going to be easily accessed by investors. And again, this is how we think we can bring more engagement and connection between people that are accountable to impact on SDGs and investors that are seeking such investments.
And collaboration across the board. It reminded me of the good old Common App for those of us who applied for U.S. universities. It standardizes the information, right?
Exactly.
Very exciting. I'm excited for it. Thank you, Arsalan, for sharing your insights today with us. The work that you and the Development Finance Institution does, it's really important. And not only to just mobilize capital, but also to amplify the conversation around sustainable finance. So thank you again for joining us today. To our listeners, thank you very much for listening in. Stay tuned for more episodes on What's the Deal on JP Morgan's Making Sense podcast. My name is Roshan Ahmad. Until next time, take care.
Thanks for listening to What's the Deal. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JP Morgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, and YouTube. To stay ahead of the curve, sign up for JP Morgan's In Context newsletter, packed full of market views and expert insights delivered straight to you. To subscribe, just visit jpmorgan.com/in-context. The views expressed in this podcast may not necessarily reflect the views of JP Morgan Chase & Co. and its affiliates, together JP Morgan, and do not constitute research or recommendation advice or an offer or a solicitation to buy or sell any security or financial instrument. They are not issued by JP Morgan's research department, but are a solicitation under CFTC Rule 1.71. Referenced products and services in this podcast may not be suitable for you and may not be available in all jurisdictions. JP Morgan may make markets and trade as principal in securities and other asset classes and financial products that may have been discussed. The FICC market structure publications, or to one, newsletters, mentioned in this podcast are available for JP Morgan clients. Please contact your JP Morgan sales representative should you wish to receive these. For additional disclaimers and regulatory disclosures, please visit www.jpmorgan.com/disclosures. Copyright 2025 JP Morgan Chase & Company. All rights reserved.